What's going on, YouTube? Uh, we're back again with another video. In today's video, what we're going to be talking about and covering is Forex technical analysis basics, right? So when it comes to technical analysis, that really involves us looking at, a few different things, right? The first is going to be market structure, right? So what is the market structure telling us? Are we getting higher highs and higher lows, signifying we're on a bullish trend? Are we getting lower lows, lower highs, signaling we're on a bearish trend? Or are we kind of ranging between 2 points, showing us we're in a stagnant market structure or ranging market structure, right? You also have the candlestick structure, right? So what is each individual candlestick really telling us, right? So when you combine what the information of these candlesticks are telling us, that's where we start to get candlestick patterns. So these candlestick patterns can be things like the hammer, hanging man, morning, shooting star, right? And what these patterns do is they give us an indication or an indicator on where price may potentially move based off the information we know about these candlestick patterns. Now, you also have chart patterns, things like double tops, double bottoms, bullish and bearish engulfings, flag patterns, multiple different things. We'll actually go over a few after we get off this slide, but just to name a few, right? And with these, like if you have a double top, okay, 9 times out of 10, if we're seeing a double top formation, that is a truly double top formation, we're going to see price react to this and start to become bearish, right? Same with like a double bottom. We're seeing price double bottom at like a very strong support zone. We have a very high indicator that now price has a very likely chance of moving in a bullish forward fashion. Also, we have our support and resistance zones, right? So where's price finding support, right? So when you think of support, think of like the floor of price. Where's the floor? Where's price finding or coming to? What area is price coming to and bouncing from this area? When it comes to resistance, think of resistance as the ceiling, right? So what area is price coming to and just not able to break through? So a good rule of thumb is the more touches you have on a zone, the stronger the zone is, but also the more likely that that zone is to break, right? So if you have like a strong zone, let's just say a strong resistance zone, price just constantly touches, and retreats from this area. When price does decide, if it does decide to break out through this resistance, you're going to see a very strong breakout because the pressure of that zone is very strong, right? Also, another thing I don't hear a lot of people talking about that I love to incorporate when it comes to my technical analysis on things is quarter point and whole number levels. So just those numbers that you see on the side, right, indicating what number, what area, what price we're trading at, whether that be Great Britain pound, whether that be indices, whether that be even a stock market. So everything I'm teaching here is not only just Forex, it also applies to the stock market, right? Technical analysis is the same throughout any financial market. So what quarter point whole number levels is price reacting to? You'll see a lot of times when it comes to the big bank, intrabank, big time traders, they're using these quarter point levels, right, in their respective trades. And last but not least, we have like trend lines, right? So these are just lines that we draw to kind of give us a base prediction on. Most of the time, they're more so a diagonal, right? So if we have typical support and resistance zones, those are typically going to be horizontal. And when you have trend lines, they're typically like at angles, different slopes to show us where price is sloping or funneling into, right? So a lot of times you'll see trend lines used when you're doing like flag patterns. And let's see. I think got so flag patterns, wedges, right? And these are our chart patterns that I was talking about, right? So you have a bearish double top, head and shoulders, rising wedge, bearish flag pattern, bullish flag wedge, falling wedge. And these are patterns that you will see constantly over your experience and your journey in trading, right? These are not things that are just like here for no reason, right? These aren't the main. I like to think like this. When I first started getting into trading, this was the main template I used for identifying price chart structure, right? Um, so over time, you'll find the ones that you really enjoy. Like for me personally, I love trading double tops, head and shoulders, and wedges. Um, those are typical patterns that I think I see typically in my trading. Now let's take a look at some candlestick patterns, right? So when I'm talking about candlesticks, this is what I'm talking about, right? What is the actual candlestick telling us, right? And you see we have single candlestick, double candlestick, triple candlestick patterns, right? And each of these tell us different things. We see all these bullish, and it's countless more. It's countless more. Like it doesn't end here. There's so many chart patterns you can learn, but you really want to start to stick with the the main key ones at first. You don't get a very solid base understanding for understanding and reading these candlesticks and price action structures, and then expanding on that knowledge, right? And just gaining as much knowledge as you can. The more you know, the more you can grow, right? So without further ado, let's go ahead, take a look at these charts, break some things down, and let's just have a little fun with this, right? So, and I'll zoom this out just so we can get an example of those trend lines I was talking about. This here is a trend line. You see its diagonal slope, and how it's also indicating where price is hitting at, right? So about 98% of my trading is purely based on technicals. If you watch any of my other videos, you know price, when it comes to trading, there's two main factors. You have technical analysis and you have fundamental analysis. Your technical analysis is going to be your chart patterns and the things that we just went over. Your fundamental analysis is going to be your news, your economic releases, earnings reports for companies, any major press releases, anything, all that is kind of macroeconomics, our main part of fundamental analysis. I'm a very, very technical trader, so I like to keep things very simple. So let's just take a look at this chart, and specifically S&P 500 index. And let's use things that we just talked about, right? Market structure, candlestick patterns, all this, right? And let's see how we can. It is Sunday. Markets aren't open yet. So let's see how we can identify a trade. For me, when it comes to looking at a potential trade, the first thing I want to do is start off on my higher time frames. So if you're a day trader, you typically want to start off on like the daily, right? That's a great time frame you start off on. You want to break things down. It's called like a top to bottom analysis. So you want to start on the daily, right? Break down your daily. Understand your support, resistance. Understand everything you need to understand about what is price action doing on a daily time frame. Because overall, you'll see a lot of times you might have bullish price action structure on the hourly that is just a higher low on the daily, right? So you don't want to get confused in what you're trading. You also want to be and have an understanding of what type of trader are you. Are you a swing trader? Are you a day trader? Are you a longevity trader? Are you holding these trades for months on end? What type of, are you a scalper? Are you getting in and out really, really quick? What kind of trader are you? For me, I'm more so a day trader. So I'm here recently, this whole year, 2023, I've been getting out of trades by end of day, right? I'm not holding trades until the next day. Typically, so far this year, I've just been getting out and reseason another position the next day. If I do see a trade that does have that, let's just say couple day potential, I'll let it run. But so far, I've just been getting in stock market open, 8:30 New York open, and then I'm getting out of my trades by New York close or shortly after New York close, right? So let's just take a look at this. And also, I sometimes I like to take a look at the weekly, right? The weekly, I want to see how, especially on Sundays, I want to see what exactly was the candlestick of last week. What was its price action? What was its structure? And then I want to look at, previous. So we're looking at this. We see, okay, price has clearly been in the downtrend. We're seeing lower lows, lower high, lower low. We did break above this high, but lower low, lower high, lower low, lower high, lower low, broke back above, lower high, lower low, and then you see we've kind of been in this bullish trend because we haven't broke back below this lower low, right? So let's take it to our daily, zoom out. First thing, and your eyes will kind of get used to this at a certain point. The first thing that I identify when I'm looking at this is this major rejection that we're getting off these slopes, right? Off these peaks. So first thing I'm going to do is I'm going to identify this major sloping. You want to make your trend line fit price. You don't want to make price fit your trend line, right? So you want to make sure you're not drawing a trend line that you are forcing to fit. You want it to fit naturally. You want it to flow naturally, right? Looking at this, we can see boom, we're getting multiple rejections from this price area. All right, so next thing I'm going to do is I'm going to find my nearest support and resistance zones on price. That way I have a kind of a understanding on where price has potential to go, right? I've already identified my market structure. Identifying again on the daily, right? So you can use the bigger legs. So this previous higher high point, right? Lower low, lower high. Lower low, lower high. Lower low, lower high, right? From this high. Boom. Lower low, lower high from this high. Boom, right? So we're identifying that as well. So we're identifying currently we are getting higher high, higher low, higher high, higher low, higher high, higher low. Right, we dipped back below. We did break below these this structure here. We are holding still at this structure point, right? So we still do have a lot of bullish potential in this price action. So now we're just going to identify our nearest zones personally. We're going to use that information. So boom, first thing, and this is where it comes to these whole point numbers I was talking about. One of the first levels I'm looking at right here is this 41 level. All right, this 41 level. Second price level I'm going to be looking at about this 4,000 level. All right. Now, one thing I want us to look at how price is reacting, excuse me, to these quarter point or whole number levels, right? Which is just support and resistance, but look how price is reacting and responding to these levels, right? We're seeing direct touches on both sides, right? When we look at this 3,600 level, we're seeing two touches. Also, you can say the formation of a double bottom. We're at a support, formation of a double bottom. Here's our neckline. We break above, we retest this, right? And we continued above, which gives us a strong indication that price at this point in time was very bullish, right? It had enough volume, had enough movement, had enough strength behind it to break through this neckline of this double bottom, retest it as support. So when you have support and resistance zone, if a resistance zone is broken, you want to see that resistance zone retested as support, right? This gives you a higher chance, a higher indicator that the price action is going to continue in that movement of that breakout, right? If you have a breakout below a support zone, you want price to retest this support as resistance, signaling we do have a strong possibility that price is going to continue to the downside further. So we're looking at this price action. We're looking at what these markets are telling us right now, right? We're identifying these zones. Now, I know some people who leave it straight lines. I'm more of a zoning type of guy. So what I'll do is I'll find the low a little bit of the candlesticks, and I'll just find a little range that I like. Each time is pretty different. I like the way that one lines up. This is relatively a smaller drawn box, so I don't have a problem. And actually, I'm going to leave this, excuse me, it's just a straight line. I'm going to get rid of these other zones, right? So now we have identified our market structure. We have identified a couple candlestick patterns, quarter point levels, support and resistance, which really are one and the same, or can be used as one and the same. And we also identified a couple trend lines. I feel like my audio is off. Also identified a couple trend lines. So let's take a look. Let's take a look into things here, right? Boom. So now we're coming into this market on Sunday, Monday, whatever, and we're looking at, all right, where am I looking for price to move past this point, right? First thing we're looking at is, okay, we see price, and if we look real close here, we can almost see what looks to be like a head and shoulders pattern, right? So we're seeing some, all right, have this run up, left shoulder, head, right shoulder, drop, right? Now that looks very similar to that head and shoulder pattern that we've seen, right? And everything is not going to be super cut, super clean, things like that. So you have to learn to identify certain patterns, certain zones in a rough market. That's very important, and that really just takes time, getting your eyes used to seeing certain things when it comes to trading, whether it be futures, indices, forex, options, normal stock trading, whatever you're trading, you have to get your eyes used to what you are seeing, because each entity flows differently. Commodities don't trade like forex doesn't trade like indices don't trade like crypto, right? So everything has its own slight variations to how they're traded, because the traders in these markets are different, right? So you have to keep that in perspective of who are the traders participating in these markets in the first place, right? So now we're taking a look at this. We see one thing, and we're showing a daily, right? We haven't even got down to our 4 hour. So let's break it down to our 4 hour. And now the easiest thing we're going to start to do is marking up. These are our major zones, right? You consider these your major zones. Within these two major zones, you're going to have zones like this, like minor support zones of previous higher highs and higher lows, where you can identify where price may come to and have potential run up from. So we actually capitalized on this trade Friday, right? And I think there's a video posted about that. I don't know. So let's just talk about it. So when it comes to this trade, what I was looking at is two things: reactive prices and zones, some of these reactive zones, and we break it down to the 1 hour, right? And also, even though we haven't looked at the DXY US dollar index, a lot of my analysis was based off what the DXY is doing. So typically you'll see if the DXY is bullish, your indices would be bearish. If your DXY is bearish, your indices would be bullish, right? So taking that in mind, we see, what did we have Friday? We had a lot of bearish movement in the US dollar. What did that correlate to Friday for the S&P 500? We had a lot of bullish movement. You feel me? So a lot of things have these what is the terminology? Can't think of it. But a lot of times they have this correlation, right? They'll either be positively correlated or inversely correlated. So if one is doing one thing, the other's doing the opposite, right? That's the methodology I use a lot of times. Well, a good amount of times when I'm basing, getting the information that I'm going to use to get into a trade, right? So all we're doing is we're taking a look at this. I did have just a slight hunch that the US dollar was going to come down on Friday, right? So I'm looking at that. And we also have, if we look at the 4 hour, We also have what looks to be like, what does that look like to y'all? A double bottom near support zone, right? So I'm looking at these two valleys, right? Boom, boom. And I actually capitalized on this trade for like 140 pips. Like I said, Friday I like to get out quick on, just any given day, but especially Fridays. I like to be out of market before 12. So I can specifically tell you where we got in and out of this trade. Actually, give me a second. Pull up my MT4 here. So we got into this trade at 3906.0, 3906.6, and we got out at 3920.6. Right. So, like I said, 140 pips. My stop loss on this was relatively short. I think it was about 170 pips. I did want to get right below these levels here. Another video will go over that for sure when it comes to where you should put your stop loss, take profits, things like that, right? So I knew I just wanted to get in this trade, get in, get out relatively quickly. I didn't want to be in for an extended period of time. So got in, got out. We see price continue to run up, I think like 300-400 pips, even more, 600 pips, right? So it ran up a couple more 100 pips from that trade, about 400 and some change pips from that trade. So hey, it's a good trade, right? If you would have held this, you would have capitalized greatly. If not, and you just got your 140, that's 140 pips, right? You're good. On a 0.01, that's $14. On a 0.1, that's $140. On a standard, that's what, $1,400, right? That's a good trade. And that was within a couple hours of trading. And I was at the gym actually when I capitalized on this trade. Like, I made the trade in the morning, went to the gym. I'm in the gym working out, not even thinking about this trade. I set it, forget it. Got my little notification alert when it was about to hit. Check markets, boom, it hit. We're good. We're done for the day. And when it comes to what I'll be looking for, when it comes to, okay, capitalize on that. Now, what's next? Okay, well, if I'm looking at the DXY, you know what I'm saying? I'm seeing, okay, we're at a very strong support zone. So we're either going to have one or two things coming this week of trading. We're going to have price continue trading in this zone throughout the rest of the week, just giving us bounces, and we'll be able to trade those. We're going to see a breakout to the top side, or we're going to see a breakout to the bottom side. It's really going to be that simple. Once we get a breakout in either direction, we're going to be looking for a retest, entering on our retest, and following the rest of the trend however it may move, right? So you never want to force a trade, and you never want to catch a falling knife. So if the trade has left you, there will be another trade, right? Wait for a retest. Don't try to force a trade. Don't try to get in late, because you might try to get in late, and that's exactly, it's happened to me plenty of times. You get into a trade, you see a trade, it looks like good trade. It looks like it's going to continue. You get in, you suffer a lot of drawdown. You close the trade, or you just have to stomach being in drawdown X amount of pips before that trade comes to fruition, right? So you want to limit that by understanding the true basics of market structure and price action. And price action is exactly this, right? The technicals, what the candles are telling us, right? So we keep all that in mind when we're making our trades. So honestly, that's going to complete this video for today. This video did become a little lengthy. So remember your basics: market structure, candlestick patterns, chart patterns, support and resistance zones, quarter point levels or whole point levels, and your trend lines, right? Identify these in your trading, build a system around these in your trading, and keep profiting. Take it easy.